Good morning. Today is December 15th. It's about 9:35 a.m. The market has opened. And guess what? Another day on the rise. So I primarily look at QQQ when analyzing the market. The whole goal with this account that I look at is to take $2,000 and basically just use that to do some simplified investing in order to beat the market. All right. So from this chart, we can see that for this year, we're at the 52-week high for the year. If I expand it out a little bit more, 2 years, we've passed that 2 year point, and now if I look at the 5 years, you'll see that we are we're basically past it. We're at 404. So the market is basically breaking out. Breaking out means breaking above the highest level, and this is kind of like an all-time breakout. So, what is the cause for that? Basically, this week, the Fed had their meeting, and although they left the rate unchanged, they did signal that there will be some cuts in the future. Maybe 3 rate cuts next year, 25 basis points, and that makes the markets happy. There's somewhat of an inverse relationship between the interest rates and the rise in the stock market. I know I've said this in the past that I haven't seen these rates for maybe over 20 years at 5%. And if I can get something at 5%, why would I need to put as much money into the stock market when I can guarantee a 5%, especially if I only need a small return? Okay. So that's where we're at today. In terms of my account, as I mentioned, I am going to kind of stay put here. You can see that the portfolio exposure has increased to 95%. I wouldn't start doing any cutbacks until maybe once TQQQ reaches 35% of my account. I am still leaving. I know people say that, some people are going to be taking money out of their cash and moving it into the markets. Because of my setup, I will not be one of those people. The rate is still over 5%. I will still keep this money in cash. And as the market continues to grow, my exposure will grow with it because this TQQQ is a 3 times QQQ, and that would continue to grow. In addition, the UPRO which is 3 times S&P 500, that should grow as well. Okay, so this is where I'm kind of at. So how does that translate into performance? So if I go into my account, this is looking at the last 3 months. You'll see that 7.66% is where I'm at versus NASDAQ 100, which is the QQQ, and the S&P 500 at 4.76. In looking at this, I've realized that I have enough data where I can stop looking at the 3 month and expand it out to the 6 month. And when I take a look that way, you'll see that the account is up 9% versus a 6.48 and a 4.69. So I am definitely achieving my goal of doing more with less. My percentage allocation right now is about 31%, but that is creating an exposure at 95% and allowing me to basically, I can't even say trail, basically have similar gains as the indexes. Right. So what will happen in the future? That's a good question. I just look at what's happening today and adjust. So next week is the 22nd. I will be doing a session before Christmas. I don't expect anything major to change. I think that we will end great through the end of the year, and then early January there will be some analysis to see whether the market stays where it's at or not. There might be some selling, but for now, I think the big boys are just trying to shore up their reporting so that they can report some great results to get more investors for next year, and then maybe next year they'll sell off. But I don't know what the future is. I'm just following and doing whatever it takes to kind of just monitor what's going on and just take my emotions out of it and just do what I need to do. So that's it. Have a great weekend. Talk to you next week.